Hi, this is Mike Andrig for BreakingCall.com. It is Labor Day weekend and we have some time to reflect on the condition of markets as we enter the historically challenging September to October time period that has generated a number of major market turns over the years. We are going to look at major industry group relative strength rankings and what the current market structure is telling us about likely future outcomes. The market is coming off its worst month in the last couple of years and weakness has been widespread, but the degree of softness reflected by some of our indicators is a bit surprising. Equities may be near-term oversold, but there will need to be a convincing rally with improving metrics on the next bounce to avoid an ongoing correction. Our first study is a relative strength index, or RSI ranking, on our database of 31 major industry groups, which measures current strength compared with recent periods. With this, we can tell whether a group is gaining or losing momentum and whether it is relatively overbought or oversold. Generally, readings above 50 are bullish, and extremes of about 80 on the top side signal overbought, while readings below 30 are oversold. RSI is used with other technical measures as persistent trends can result in readings staying overbought or oversold for extended periods of time. This week, we see only one of 31 major industry groups with an RSI above 50. That is the Internet group, and it is only showing us about a 53 RSI. This is a notably weak condition, and it suggests either a material correction underway or a bear market developing. Other internals are also showing signs of weakness, such as the cumulative volume index, which is shown on our next chart. Volume has not been able to maintain levels sufficient to sustain the rally for the last few weeks, and we'll need to see more volume coming in if the market is going to resume the longer-term uptrend. Switching to a weekly chart of the Dow Jones Internet Index ETF, symbol FDN, the strongest group is extended well above its key moving averages and is hitting resistance at the top of the trend channel. We also see negative momentum divergence appearing, suggesting that at least a pullback in the group is likely. To see this kind of action in the strongest market sector should give the bulls some pause. Let's now look at VeriSign, symbol VRSN, which is a member of the Internet group, an Internet security stock. VeriSign looks vulnerable with a big triple top developing at the all-time high, which was first reached in late 2012. This stock is 40% above its key 40-week moving average, and a proportional correction could easily send this stock down to the 38 to 41 area. One of the weakest groups is retail. And let's look at the weekly chart of the Spider, Retail Spider XRT, which has turned down but is still surprisingly resilient given the weak RSI reading and the extended position of the stock. This suggests that important support could be as far down as $65 if channel support near 72 doesn't hold. Let's look at a major group member in retail, Wal-Mart stores, symbol WMT. Despite an RSI below 40, Wal-Mart still appears extended and vulnerable. We are still finding it difficult to locate attractive technical setups on the long side, even in the weakest groups, suggesting more downside ahead. Wal-Mart has a potential head and shoulders or double top and is 20% above its 40-week moving average despite a pullback. Near term, a bounce is due, but we would be viewing rallies as selling opportunities in Wal-Mart until further notice. In order to resume an uptrend, it appears that the 67 level may need to be tested and validated as support. Thanks for watching, and visit us often at BreakingCall.com.